Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be taking yet another look at my M1 Finance portfolio. And in this portfolio I focus on investing in some more risky stocks that definitely have not proven themselves nearly as much in the market, have not proven themselves with their actual results quite as much as some of the other blue chip dividend companies that I invest in my Fidelity account. And for me, this is just kind of to try to get some exposure, I guess, to some slightly more risky companies. And it's also, a pretty passive way for me to do that as well, since I do use M1 Finance. And I really, do enjoy their platform because it allows you to be pretty passive with your investments and not have to pay attention to them all that much. So obviously you can see here the portfolio is pretty small right now. At this point, I contribute about $15 per week, which is really not that much at all. But it's, more than nothing, which is something that I like to think sometimes when progress seems slow, that's okay because, you're at least doing something, which is better than nothing for sure. So as you can see, we'll first look at the activity here. So over the past month, just been making our normal, deposits every single week. We did get a dividend here from Visa, just about 6 cents, and a dividend from VGT of about 18 cents. So, not really focused on dividends here, but I guess, it is a nice little perk. So just making our weekly deposits of $15, and then about every 2 weeks, M1 Finance automatically makes these buys for us. So this 1 week we only bought 6 of these companies because they were the ones that were underweight in the portfolio, and then one of them was excluded here because it was too small. So any buys that are less than the $1 minimum are excluded from trading. And then, obviously 2 weeks later, we made similar buys as well. Slightly different companies at this time. More were excluded because they were supposed to be less than $1, which is kind of the annoying part, I guess, of having such a small account, but it's not that big of a deal. So that's kind of what's going on here. And if we look at the actual holdings right now, we're around $683 in portfolio value, and net cash flow into the portfolio has been around $860. And I will note probably about 200, 100, definitely $100, maybe more than $150 of that cash flow is from referral bonuses with M1 Finance. So I haven't deposited $860 of my own money. Some of that has come from referral bonuses, which is super nice. And if you are interested in signing up with M1 Finance, they have a pretty nice platform here. And basically what you can do is you set up this pie, and you set up a target allocation percentage for each of your holdings. And then it basically splits whatever money you deposit and buys, stock in that proportional amount in order to match the target percentage for you, which I think is pretty cool. So obviously you can't get super precise with it. Like if you see a big dip in one company one day, you can't really go in and make a manual buy that instant. They have these trading windows, which is at 9:30 a.m. every single day. And then if you sign up for this M1 Plus program, you also have another trading window at 3 p.m. But for me and my strategy, it's really simple. I just deposit money every week and then let M1 Finance do the buying for me. So it doesn't really matter, when I buy the stocks per se, because I'm not really looking at the price that closely when I am buying them. So that's not really something I'm worrying about. But if you are interested in signing up, definitely use my link down in the description. Right now, it's only $10 to sign up if you deposit $100 in a regular account or $500 in a Roth IRA. Both you and I will get $10 into our accounts. It used to be, $30 or $50, but they might bring that back at some point. But if you are looking to sign up and get started anyway, and you don't want to wait, then it's still a nice little bonus. So definitely check that out if you are interested. And now we'll kind of look a little bit more in depth at my holdings. The first one, VGT, around 17% of the portfolio. This is sort of a core holding. And honestly, I might want to bump this up a little bit in the future so that it's a little bit more of a core holding per se, because most of my holdings in this portfolio are fairly even on how large of a position they are. The next one here is ARK, the ARK Innovation ETF, and this one is about 10%. I've gradually been lowering the allocation on this one over time as I guess I become more comfortable, choosing these investments myself, and also as I just become further, dissatisfied with ARK, and I definitely never really bought into the hype of ARK like all that much, but looking back, I definitely did a little bit, because that's kind of why I bought it, I guess. But it's not that big of a deal. It's still, over the long term, a lot of those companies are going to do well, I think, that they're investing in. Some of the decisions they make are a little bit questionable in my opinion, but at the same time, I'm not in that position to have to make those decisions, so it's easy for me to pass judgment on that, I guess. And a lot of the companies they do own in this ARK Innovation ETF, I own in my portfolio below. So I'm kind of making those same picks or same mistakes per se. So again, I can't judge them too hard. So this one has obviously not been performing well very much, but I think, like I said, over the long term, it's not that big of a deal, and I think to be buying at these lower prices is definitely something I'm not complaining about. So over time, I'll probably lower that to closer to 8 or 5% maybe, but for right now, just keep it there. And then PayPal, right now, PayPal, two companies that I really, I guess, think highly of, and I think are at very big discounts, are PayPal and Square. So down pretty big on this position for PayPal, and also for Square down pretty big. So those are ones that I'm really not worried about at all. Like, not at all am I worried about those companies, and I'm just honestly excited to be buying them at these reduced prices. Like PayPal is like $110 or $115 per share, and Square is around like $130, I think. And I just think those are good prices for those companies, and so I'm not really worried about that. The next one, Google here, great company, of course, produces a lot of revenue and profits from all its services, be it like the actual search engine or YouTube, and a lot of other things they're doing. I guess they're getting into other areas of tech, which is interesting, like self-driving cars, stuff like that. So I think they have a lot of potential there with some of the other tech, I guess, that they're getting into. So that's just something interesting that interests me. So that's why Google, I guess, stands out to me. And they are doing a stock split, which will be interesting, and oftentimes that helps boost the stock price a little bit, so that's exciting. Similar thing with Amazon. They're also exploring a lot of interesting technologies, and they have a lot of cloud services, which is super powerful. I see that as being more powerful and having more potential than their actual like shipping and online distribution business, if you will say. So again, just exploring those new technologies and taking advantage of those. So, and again, they're doing a stock split, which is exciting to me. And the next one here is Shopify, and I feel like Shopify is in more of a niche than Amazon or Google per se, which is to some degree a problem, but at the same time that allows them to hone in and be more detailed, I guess, and be more of an expert in their area, which is definitely a good thing. So I'm not too worried about Shopify either. Definitely don't have quite the amount of peace of mind, I guess I would say, with something like PayPal, but it's fine. This is more of a risky portfolio, so again, I'm expecting to have some winners and some losers, and maybe I just started buying Shopify at the wrong time. Tesla, one that it has done pretty well for me in the portfolio, and compared to the other ones, it's done pretty well. Compared to a lot of people who have been buying over the past few years, I guess it's not done very well at all, but gains are gains, and I will not complain about that. And I think they have obviously a lot of things going for them moving forward. So the next one here is Jumia, and this one actually has just been doing awful stock price over the past year or two, and I think it might start to turn around sometime soon, because recent earnings reports have steadily shown progress towards profitability, and not decreasing their revenues very much. which, if you aren't aware, basically they adopted a strategy that would essentially decrease revenues, or the effect of that would be that it would decrease revenues but increase profitability over the long term, or actually over the short term, and then eventually in the long term the revenues would increase again as well. But they actually announced a partnership with UPS, so that will allow them to, ship things and deliver things faster to people. And combined with that, steady earnings over the past few months, or sorry, few quarters have just been getting better. So I think it's just a matter of time before they start to turn it around and people start to kind of see the light at the end of the struggle tunnel, if you will. I'm definitely a little bit more worried about Jumia as a successful company than probably any of the other companies on this list, but I think they are definitely going in the right direction. They're probably the smallest company of any of the companies on this list for sure. And then Adobe, definitely one that I would say is sort of niche as well, since they have, obviously Photoshop is their big product, but I guess at the same time they are like a very software-oriented company, which is really good. And that kind of, subscription as a service model, or software as a subscription, software as a service model, whatever you want to call it, is pretty powerful these days. So that's something that is definitely good about Adobe. And then Microsoft and Visa here, pretty similar companies, but I do own both of them, both about 5% of the portfolio, and both have performed about the same, which is pretty funny. But you would expect them to kind of perform together as their sector receives news. But obviously there's going to be some news and some events that affect one but not the other. But overall they've done about the same, and I can't complain. I think over the long term, again, with sort of the move away from the traditional financial system that seems to be happening, at least a little bit, there seems to be some excitement about that. I think in the long term they can take advantage of that very well, as Square I think can even more, and is kind of moving in the right direction for that even more than MasterCard and Visa. But MasterCard and Visa are definitely more well established, which is an advantage as well. And the last one here, Spotify, definitely a smaller position, and one that I'm not as excited about as some of these other companies, but I think they are doing a fairly good job of being, sort of like a media company and a media distribution company, and almost sort of trying to rival YouTube in a sense, and doing a pretty good job of it, I think, in terms of, being fair to people and not just, taking down videos or other things here and there for seemingly random reasons and being super strict about it. So I think they're doing a good job there of kind of creating an open platform, at least to some degree, to allow for more conversations and thoughts to be shared, more so I guess than YouTube and maybe some other platforms. So I think that's definitely a good thing to see these days. So overall, my portfolio has struggled for sure over the past, quarter, I would say, and it's continued to go up, but that's because I've been depositing money, not necessarily because the stocks have been performing well. And you can see over the past 6 months or so, it's just kind of been stagnant a little bit, as a lot of these companies have continued to decrease in stock price while I've continued to add more money to the portfolio. So the overall value of the portfolio hasn't increased that much, and over the past month or two we've seen some increase, which is good for sure, and I think we will start to see more of that. So definitely let me know what you guys have been investing in terms of more risky investments, more growth oriented companies rather than solid blue chip dividend companies. It's definitely something that people will say, oh, since I'm young, I want to invest in more risky companies, which is definitely one way of doing it, but at the same time that just doesn't really make as much sense for me. However, I do see some of the allure of that, so I wanted to allocate a small portion of my investments to that. So that's kind of what this is. So again, thank you for sticking around to the end of the video. I really do appreciate it, and I'll see you in the next one.